One of the most common sources of delay, or even loan denial, in a real estate transaction is incomplete or missing documentation. To avoid complications, real estate agents must be familiar with the types of documents lenders require and help their buyers prepare early. While agents are not mortgage originators, your knowledge and guidance can help keep the transaction moving forward smoothly and in compliance with state regulations. Income verification lenders must confirm that a borrower has a stable and sufficient income to repay the loan. Depending on the buyer's employment status, lenders will request specific documentation. Standard employment, W-2 borrowers. Recent pay stubs, typically covering 30 days. Example, if a buyer is paid bi-weekly, they may need to submit their last 2 or 3 pay stubs. W-2 forms from the last 2 years. Example, a teacher working for Mesa Public Schools submits W-2s from the past 2 years showing consistent income. Employment verification letter, if requested. Some lenders may contact the employer or request a written letter confirming continued employment, especially if the buyer is newly hired. Self-employed borrowers. Tax returns, usually 2 years of 1040s and business returns. Example, a self-employed graphic designer provides her 2022 and 2023 tax returns, which show fluctuating income. The lender averages her income over 2 years to determine qualifying ability. Profit and loss, P&L statements. If the buyer hasn't filed the most recent return yet, the lender may ask for a year-to-date P&L. Why this matters legally. Under AAC R4281101I, agents must exercise reasonable care when communicating material facts. If you know your buyer is self-employed and hasn't filed taxes in over a year, that is a material financing issue that must be considered before making offers. Failing to do so could put the buyer and you in a breach of ethical duty. Asset documentation. Lenders need to confirm that the buyer has enough money for the down payment, closing costs, and reserves. This is done through a review of bank accounts, investment accounts, and sometimes retirement funds. Bank statements typically last 2 to 3 months. Example, a buyer provides checking and savings account statements showing a $25,000 balance to cover their 5% down payment and closing costs. Documentation of large deposits. If there's a $10,000 deposit with no clear source, the lender will request documentation to ensure the funds are not borrowed. Retirement or investment accounts. A buyer using a 401k loan for their down payment must provide a statement showing available balances and loan terms. Real estate. Example, a buyer submits an offer on a home in Scottsdale and intends to use a gift from a parent for the down payment. The lender will require a gift letter signed by the donor stating that the funds are not a loan and do not need to be repaid. This must be supported by the donor's bank statement showing the gift. Credit and liability review. A buyer's credit profile plays a major role in loan approval and interest rate. Lenders look at the borrower's credit score, history, and current debts. Credit report. Pulled by the lender with the buyer's consent, it includes scores from all 3 credit bureaus. Explanation letters for derogatory marks. Example, a buyer with a bankruptcy from 5 years ago may need to explain the cause and show financial recovery. Debt to income, DTI, ratio calculations. Lenders calculate both front-end, housing debt, and back-end, all debt DTI to assess affordability. Example, a borrower earning $6,000 a month with $2,000 in total monthly debts has a 33% back-end DTI. Different loan programs have different allowable DTI limits. Commissioner's Standard AAC, R4281101A. Agents must deal fairly with all parties. Misrepresenting a buyer's debt load or ignoring a credit issue that will affect financing is not just risky. It violates your legal obligations as a licensee. Other possible requirements. Lenders often request additional documents based on the buyer's situation. Gift letters with donor's name, relationship, and source of funds. divorce decrees or child support documentation, required if court-ordered obligations or income affect the loan. Rental history or mortgage verification. Example: a renter seeking a mortgage may need to show 12 months of on-time rent payments, especially if they lack other credit. Streamlined documentation processes. Thanks to technology, much of the mortgage process has become faster and more secure. As an agent, understanding these tools helps you support clients and anticipate potential slowdowns. Automated underwriting systems, AUS. Desktop Underwriter, DU. Fannie Mae, Loan Prospector, LP, Freddie Mac. These automated systems evaluate the risk of the loan and may waive or reduce documentation for borrowers with strong credit, steady income, and low DTI. Digital verification tools. The Work Number, a third-party system that verifies employment directly with large employers. Finicity, Plaid, or similar tools provide secure access to bank accounts so lenders can verify balances instantly. E-signatures and secure portals. Buyers can now electronically sign disclosures and loan forms. Lenders use encrypted portals for document uploads, reducing the risk of lost paperwork and protecting sensitive information. Reduced documentation for high-quality borrowers. Some lenders offer streamlined approval processes for buyers with high credit scores, long job histories, and low debt. These may include W-2-only programs that don't require tax returns. Real estate agents' role in the documentation process. Although you are not expected to collect or review your client's financial paperwork, you play a critical role in preparing and supporting the buyer. Prepare the buyer early. Educate buyers on the types of documents they will need before shopping. Encourage them to start collecting pay stubs, bank statements, and tax returns early. Example: an agent sits down with a first-time homebuyer and walks them through a simple document checklist. The buyer begins organizing their financials before viewing any homes, leading to a smoother transaction. Maintain communication with lenders. With the buyer's permission, check in with the loan officer during escrow to track progress. Help resolve delays if documents are missing or incomplete. Manage timelines. Be aware of contract deadlines for loan status updates and closing. Ensure buyers submit necessary documents on time to avoid delays. AAR Purchase Contract Reference, Section 2E, Loan Status Updates. The buyer must provide the seller with loan status updates, LSUs, at agreed intervals. If the buyer fails to provide documents to their lender on time, the LSU may indicate insufficient progress, jeopardizing the deal. Statutory background and broker knowledge. Though real estate licensees are not governed under Arizona's mortgage licensing laws, understanding them helps you better assist your clients. ARS, Title VI, Chapter 9 governs mortgage brokers and bankers in Arizona. These statutes regulate documentation standards, disclosures, and licensure of loan originators. Knowing what lenders are required to request helps you guide clients and stay ahead of problems. Documentation drives the deal. Mortgage documentation is the engine that powers the buyer's loan approval. As a real estate professional, your role is to educate your clients on what documents to prepare, coordinate with lenders for a smooth process, monitor timelines to keep the contract on track, comply with AAC R428-1101A and I by disclosing known financial facts and dealing fairly with all parties. By supporting the documentation process professionally, you enhance your value to the transaction and help ensure successful closings that comply with both state law and industry standards.